Welcome to TheoTRADE. This is Don Kaufman. It's August 9th, 2024. Just 40 minutes stand between us, of course, and this weekend. And after a volatile week like this, we need it. But I'm going to tell you right up front, look, this volatility, it is here to stay, people. Let's break it down and much more here, of course, on this TheoTRADE weekend update. First and foremost, let's state the obvious. This was Mr. Toad's wild ride of a week. But kind of ironically, if you took a look at the SPX right now, I'm actually going to go into the daily chart, realize that if the S&P is closed right now, we would literally be massively unchanged for the entire week, which is shocking, given the fact that, of course, that Monday we opened precipitously lower. We saw at what point looked like a 65 VIX. I'll get into that in just a moment because that reading is not accurate. The volatility has collapsed back down to 20, but as I said, don't think this volatility is just going to pass us by. It is here to stay. And I'm going to show you exactly why, okay, by looking not only at the S&Ps, the S&Ps and the levels over here, but you got to dig a little deeper than that. We're going to look at the bond market. We're going to look at volatility. We're going to look at the fact that CPI is coming out this next week, and that's going to be wild. I mean, CPI coming out, it's not what you think. So right off the bat, I just want to show you even some of the up moves in the latter portion of the week, even the up move, okay, it's been schizophrenic. The real sketchy, chopped out trade. We're getting wild movement, okay, into 1 minute bars in the S&Ps. And the reason I'm zooming into this is just to display to you that even some of the up moves, okay, this is just pure violence inside of your trade. And I got to tell you, I like it. I mean, you're getting 6, 7, 10-point candles in a 1 minute. Volume is surging out there. What's even more wild about it is, okay, it's not just some of the down moves, some of the up moves as well. Okay, so the volatility, even though that we've rallied back, okay, to a decent extent. I'm not going to diminish the rally. I mean, look, one of the hallmarks of volatility is the rip your face off rally, which I've talked about that extensively. But the S&Ps are still just as sketchy as they were, okay, back here on Monday and Tuesday. And, rallies had failed ultimately on Tuesday, Wednesday, Thursday. We actually grip hold. See actually a decent sized movement. And right now, where are we? Well, let me actually show you a bit of a different take on this. So I'm going to move you away from the daily chart inside of the S&Ps. Okay. And if you're looking at the daily chart in the S&Ps or even the intraday chart, you almost kind of think to yourself like, oh man, this marketplace is just struggling to get above, okay, somewhere in this neighborhood of this like 5360. Yeah, let me give you a little bit of a different take on that one. We're going to switch it from a 1 day, 1 minute. By the way, during volatility, I love looking at 1 minute. 1 minute's awesome. Hey, again, you get like 10 handle candles. That's good stuff. All right, I'm going to go to a 30-day, 1 hour. And the reason I'm actually cruising into the 30-day, 1 hour is, if I didn't know better over here, okay, I would actually suggest to you that this is some type of volatility channel, okay, that we're starting to see. Now, those of you that have been around here at TheoTRADE for a while, if this thing keeps oscillating back and forth inside of this channel, and the channel is basically somewhere from 5,200, so 5,200 inside of the S&Ps, up to the neighborhood, we'll put this, the top of this, somewhere right where we're at right now is 5,360, okay? So again, associate those levels because they're going to be critically important to watch. Anytime we get into volatility, I'm always about levels, right? 5360 to the downside. I'm just going to put a nice round number, okay? 5,200. It's a fairly tight, okay, range in there. Oh no, Don, it's 160 points, okay? Have you not seen what's happened throughout the course of this week? So right now, we're in what is the beginnings, if you will, okay, of a bit of a volatility channel. And what that basically implies, you're headed up and down, okay, inside of this. Cracking to the upside would be an explosive move. Cracking to the downside, again, an explosive move, okay? In other term for it, if this actually continues for just a few more days, okay, we would actually look at this and start to actually term it, okay, the volatility box. That's terminology we haven't used in quite some time. What a volatility box basically is you literally get trapped inside of a range, and that range happens, okay, because of huge accumulations of open interest inside of the options marketplace, specific to the SPX, the NASDAQ, a lot of different equity products, okay, and you get caught inside of these like volatility channels. And again, breaking outside of one is violent. And the reason breaking outside of it would be violent, okay, and there's absolutely no bias to the upside or the downside for me right now, okay? I'll get to that in just a moment. But the reason the violence inside of the of trade there, breaking to the upside or breaking to the downside, is you're actually pushing away from heavy amounts of open interest, okay? And fast moves happen when you break these volatility boxes, and the fast move is caused by hedging activity. The second you actually move away from the core of risk, imagine that this is a big ball of risk, and you start to propagate a little bit higher, okay, everybody has to hedge in the direction of the market move, meaning that as we head higher, all the big trading firms are going to have to buy. Why? Well, they're caught, okay, in that negative gamma out there. Anyway, onward and upward over there, the ES levels, okay, that I just put on the screen, 5360, 5200, are definitely in play right now, okay? So I want to move past that a little bit, but I thought that was critically important because you can see it almost feels like maybe we're topping out here a little bit, possibly. Today's close is important. Obviously, next week is going to be critically important, but at this time, pay less attention, okay, to people talking about and prognosticating. We're going higher, we're going lower. Right now, you need to think major levels, latch on, okay, like it's grim death, okay, and look for breaks above or below those levels we just signified. All right, spikes in volatility, okay, and of course, market bottoms. One of the next things I want to cover in here is the spike in the VIX up to 65, okay? I want to be very clear, very concise about this. The spike in the VIX up to 65. I'm actually going to do the time frame. This is a 1 day, 1 minute. I'm going to back up 5 days and hit OK. One of the things I want to show you in here, I was looking at this extensively in the last couple of days. Here's the spike, okay, in VIX to 65. You want to realize something? It's in the pre-market. VIX is an equation. The equation in the VIX is actually based on the SPX. The SPX is completely and totally illiquid in the pre-market. Okay, to me personally, I completely negate that move ever even happened. I don't think we actually got to 65 level. It took me a couple of days to realize that. Real pricing in here, somewhere down here, okay, maybe the mid 40 levels, but that spike in volatility never would have occurred. Now you can look at the volatility futures. The volatility futures earlier in the week, I think those really do give you a bit of a better feel for it. As I kind of scroll back on the week, the volatility futures also, okay, had this dramatic spike, but it was up to like the 37 level. Okay, again, maybe giving a better feel. Speaking of VIX and volatility, one of the things I also want to make a comment on, I think that's important, is that volatility spiking, okay, in no uncertain terms, it doesn't have to coincide with market bottoms, okay? And I want to make that very, very clear. Again, volatility spikes. For instance, we spiked huge in volatility on Monday. That does not necessarily have to coincide with a bottom to the marketplace, meaning that absolutely unequivocally, the markets could head lower right now, but volatility never has to see 65 again. And I always relate this, and I was talking about this earlier in the week, okay, to like a scary movie. The first time you actually see that scary movie, you jump out of your seat. By the third time, you're like, whatever, okay? If you actually look back in major instances, okay, of volatility spiking, you'll find out that many, okay, of those instances actually saw the marketplace head lower on lower volatility, meaning that the spike in VIX in several instances does in fact coincide, okay, but it doesn't have to. So if you look back to like a little like a crash in the marketplace in 2015, that's when the yuan devaluation came. The marketplace did in fact spike in volatility. The market bottomed very, very rapidly. That was over, but that one was only a flash in the pan. If you looked at it a little bit more of a serious situation, okay, like for example, let's actually go back here and I'll show you exactly what I mean. If you went back, okay, to something like the financial crisis. Okay, I'm not indicating that we're in anything like that. But the financial crisis, obviously volatility spiked in October, but the markets never bottomed, okay, until all the way until March 9th of the following year. So that's important. Don't necessarily rely on VIX to give you a market top or a market bottom. It's honestly not a very effective way. It does not necessarily have to coincide. All right, so lots of instances of markets heading lower, okay, as volatility actually does subside out there. All right, next thing I wanted you to look at is, well, we just took a look at the VIX. We're going to look at the volatility futures. As you look at the volatility futures, so things have subsided to a degree, but we're still technically in backwardation, which means anything is possible, anything is plausible. What would change this marketplace dramatically? Something like CPI coming out, which I'm going to discuss here momentarily. Moreover, okay, so we're still in volatility backwardation. Moreover, we're going to look at VVIX. This is the volatility index. The VVIX right now, still in never, never land. I mean, we're up here at the 118 level. Now, you should see VVIX contract. You should, okay? Should probably even contract more than it presently is. What we're actually seeing right now is there's still very, very heavy degrees, okay, of hedging activity that are persistent. The last thing I would show you on this particular front is what we term skew. Skew has pretty much shocked me the last couple of days. Skew is headed dramatically higher with the markets actually backing off and then rebounding. But skew, okay, is indicative of out of the money put volatility versus out of the money call implied volatility. That put vol, okay, has remained really heavy. In fact, again, there's a bunch of different ways to look at this, but skew to me is it's insightful at this time because again, from my perspective, it's really high for the fact that the marketplace is sold off, right? So why does skew typically come down when markets sell off? Oh, normally you would see traders selling puts, okay, into sell side activity. And quite frankly, with skew remaining this high, it just simply implies that traders are not necessarily selling puts. They're not taking down that skew. And I find that obscure, okay, to say the least. It leaves me in kind of a lurch thinking that, okay, there's a lot more volatility possibly coming forth. All right, moving on from there, okay? I'm actually going to jump forward to the bond market. I want to jump to the bond market, okay, because I think that this is opportunistic, but I also think it's indicative of markets and market risks. All right, the bond market started ripping, okay? And when it ripped, the S&Ps, it was almost like it was priming for the S&Ps to sell off. Well, okay, this week, what did we see? We saw the bond market actually peak out somewhere around 126 and change, almost hitting the 127 handle. Then the bond market ultimately subsided. Okay, two things. Number one, I think that there's an incredible opportunity right now, okay, to be long, okay, some of these bonds, long bonds, looking for them to revert back higher. If you believe that volatility, okay, is still forthcoming, which is very, very likely, right? But if you believe volatility is still forthcoming, I think there's an opportunity for bonds to pop back to the upside. One of the other aspects in here, when I say volatility is here to stay, yeah, the bond market came down and sure, volatility contracted a little bit, but that's the VIX that contracted. The volatility futures are still in backwardation. The VVIX, okay, is still absolutely rocking at the 118 level. I just showed you skew that was jacked up. And today we're actually seeing a rally, but we're also seeing the bonds come back. Does that make you feel warm and fuzzy? None of those factors, whether it's the VVIX, whether it's skew, whether it's the backwardation and volatility futures, okay, or the bonds starting to rally, none of those make me feel warm and fuzzy that volatility is abated. That's one of the reasons I'm saying volatility is here to stay. It's here to stay because, okay, outside of just the obvious, oh, the S&Ps have rallied back, all right? The not so obvious is that a lot of risk metrics are still relatively high. I think it's a great opportunity right now for long bond positions. Now, do I want to go out there and just start buying bonds? No, I actually took my positions specific in the TLT. Okay, I took some positions inside of the TLT, a couple of bullish positions, which are, okay, quite profitable at this point already. Anyway, onward and upward from there. I want to revert back also, okay, to the fact that, again, I'm looking for volatility to be here. So the TLT is a possible position. I'd be on the bullish side of the TLT. The other one that really resonates with me right now is Meta. Okay, in terms of positioning myself, I want to be short Meta. I am short Meta. I've actually gotten short Meta in a couple of different ways, not only for the short duration, but also in what's called a duration position, meaning that I'm literally short stock and okay, I've actually got deep in the money, okay, which is a synthetic short, deep in the money puts, which is a synthetic short inside of Meta. Look, the bottom line is it just implies I think Meta is going to go down. Why do I believe Meta is going down? And I want to make something very, very clear on this front. I'm not going to sit here and be all like anti-Meta, okay? I can see that Meta is inside of a pretty good channel right here. Great, wonderful. You know what's crazy about it? Take a look at Meta on this week. This thing's outside the upper edge of its expected move. Now, to me, that's absolutely spectacular. Why? Look around. Look at Microsoft. Microsoft, pretty much where the S&Ps are. Apple, okay, where we are in Apple right now, where are we? Oh, it's lower on the week, just clawing back what was an absolutely horrendous week. Amazon, okay, almost unchanged in the week. Google, okay, Google, lower on the week. But overall, let me just get rid of the expected move for a second. Everywhere you look, okay, whether it's NVIDIA, you can see I'm working some orders in here, whether it's NVIDIA, whether it's Tesla, whether it's Google, okay, whether it's Amazon, whether it's Apple, whether it's Microsoft, they're getting hammered out there. What do you got in Meta? Absolutely nothing. It's completely unscathed. And unscathed is where I want to be short. If there's going to be another round, if there is going to be another round, okay, of volatility, you better believe it's coming to Meta. So short Meta at this point, if you're not comfortably being short stock, use, spreads, go out there, define your risks. There's a bunch of different ways. I've actually done it here at TheoTRADE, and something I've talked about extensively inside of the chat room throughout the course of this week. All right, so we talked a little bit about S&P levels. Volatility spikes don't necessarily coincide with market bottoms. We looked at VVIX, we looked at vol futures, we looked at skew, a meta short. Bonds have room to run to the upside. And here's the real kicker. Oh, coming into this next week of trade. So we're coming out of a week. Let's go back over to the SPX before we talk about CPI. We're coming out of a week, all right, that has roughly a 138 point, okay, expected move. And we saw every ounce of 138 points and then some. I mean, you had 230 plus point moves in terms of the S&P futures. So we cracked outside, right? And I'm actually going to zoom specifically into this. Early in the week, we crack outside the expected move, okay? On Tuesday and Wednesday, we're just riding the lower edge. Where are we right now? Massively unchanged on the week. So a spectacular kind of recovery. What, pray tell, are we expecting next week? Well, right now, again, this is just kind of handicapping it, but right now we're looking at about a $120 move. So the one interesting thing to me is that this did contract substantially from this morning. From this morning, okay, this number was actually 150 bucks. And I'm going to tell you right now, don't get off your game, people. This is a big number still. $120 of expected move is still a very big number. Now, here's the thing. Devastating effects possible from CPI. I can't stress this enough, okay? And I'm going to talk about it extensively throughout the course and leading up to the CPI print. So in this next week of trade, all right, I'm going to go over to the calendar over here. Okay, in this next week of trade, we're actually going to get a print, specifically CPI. Okay, the CPI print will be out again Wednesday morning. Nice, great. Why should I care? Well, we're going to be in a really precarious situation. When you start thinking about CPI, which is obviously inflation, what do you want the print to be? If the print comes in hot, that basically entails that inflation is not cooling off. But if the print comes out soft, that could entail that inflation is actually what? Cooling. The only problem with that is if inflation cools more than expected, this is the whole key. Whatever's expected, and again, I could care less about the number. It's going to be about the market reaction. Whatever's expected. If it comes out lighter than expected, this market's going to get rocked to the downside. Why? Because you'll actually mean we're in a deflationary spiral and that the marketplace is going to anticipate that as being absolutely horrific, that the Fed, okay, has made a mistake and they should start cutting, okay, immediately. So we are in a really huge catch-22. The entire, okay, last what, like 18 months, we've been looking and being like, come on, inflation, come down, inflation. Now we're like, you better actually come in at the number or slightly higher, okay, or we are in trouble. Now think about that for just a second. You better come in, all right, at that number or higher, or we are in trouble, people. So it's something to think about. And by the way, I'm not the only one thinking about this. If you take a look at the S&Ps and you open up specifically to Wednesday, which is the of course the 14th, you'll see implied volatility. It's pretty mellow, you know, on like Monday, Tuesday, Mondays. Oh, it's only a 13 vol. Things have calmed down. It's a $51 move though. On Tuesday, oh, it's like a 16 vol. All of a sudden, vol jumps, okay, to 18 and change with literally, you know, almost what, a $93 move. Okay, so volatility is absolutely pricing this in, and the latter portion of the week, okay, things are going to rage. So the beginning of the week is supposed to be a little bit more mellow. The latter portion of the week, okay, volatility is supposed to rage. That's literally what the S&Ps are saying over here. I'm reading right into the vol skew. Okay, the one differentiating factor I'm going to give you on that front is simply this. Okay, if you take a look at the 12th of August, look, anything happens geopolitically this weekend, we're going to be rocking. There are so many reasons right now to just stay on your game. You need to assume that volatility is here to stay. Remember the levels, okay? Watch volatility very, very carefully, and we'll talk you through the rest. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.